Nigerian equities market ends the month of June in the green after the two-day Eid holidays, with investors taking some positions ahead of Q2 earnings. Mukhtar Mohammed, an analyst at Assar Investments, joins me now for more on the performance of in the first half of the year and what to expect in the second half. Mukhtar, it's a pleasure to have you on the program. What do you make of the market's performance since, if you like, inauguration day? It seems it's like night and day since then. And of course, the big question is its sustainability. But let's start first of all by unpacking your thoughts on the market's performance in the second quarter.
Well, it was very impressive. Anybody that told you that they knew the market would perform like this, must have been a soothsayer, must have seen it. Nobody thought the market could perform like this. Like I always tell people, we have gone through some rallies. We had the inauguration rally, which we could say the inauguration and fuel subsidy removal rally. Then secondly, we had the Emefiele rally. Yes, then you had the unification rally also. So all these have been going on, but now maybe we might have the cabinet rally. That all depends on who becomes the Minister of Finance. But outside of that, I think those decisions, especially the unification of the exchange rate and also the removal of subsidy, unifying the exchange rate is helping the banks, especially. Then the removal of subsidy, you can see the oil majors are the one that have gained. We've not seen so much moving in the conglomerate because we've not know how those inflationary figures will come down. There's most Nigerians, no increment yet in salary. A lot of Nigerian purchasing power is still low. So you are not seeing those rallies in those sectors, but basically the financial sector and the petroleum sector, oil and gas sector has been the tools of investors thus far.
Okay, so what do you expect in the second half? How much is left in this upside for the market?
Yeah, second half, it all depends. We'll say the second half result. Will the PE ratio still be as low as it was before now? One, then the earning per shares, will there be more improvement in the earning per shares? That also will play a role, and that has to do with the profit. Then again, like I said, who is going to be the minister, especially with the economy? Who is going to be there? So it will determine what will happen in the second quarter. But it looks good. It still look good. And like somebody jokingly said, if at the end of the second quarter, at the end of the year, some of these bank stocks close where they are today, it still has been a good year for the investors in the banking and oil and gas sector.
No doubt, it's been good, and I can see that you're also excited about it. But okay, let's begin to talk about some of the risks, because no doubt investors have read the move to remove the subsidies and to harmonize the exchange rate as positive for the economy. And many will suggest that these are things that we just had to do. But then let's look at the impact of some of these moves. Inflation continues to rise, and there's an expectation it's even going to rise further. Of course, you know that fuels a lot more poverty in the country. There's now the risk of protests and so forth. I guess everyone is looking at the moment and saying these are the right moves. But in the short term, if we do not see rapid changes that would, one, boost government revenues to address debt sustainability, and then, of course, second, to rein in inflation at some point, I think we may begin to have a different conversation later down the line.
Well, for government revenue, Wale, or one of the newspapers calculated that government have been able to save about 400 billion in the month of May alone, May and June, by removal of subsidy. That would definitely play a part in their revenue going forward. And from World Bank report, they said government will be able to save about 11 trillion in the next couple of years. So definitely, I think in the area of revenue, you could say the government is still doing well. The area the government need to work out is to widen the tax bracket. How do we go about that? How do we get the informal sector to begin to pay tax? Because presently now is the informal sector that is paying tax. For inflation, definitely one of the key drivers of inflation, Wale, we said it in this program, the former CBN government, or his former CBN governor and his, or the suspended CBN governor and his management team did not want to take the bull by the horn. And we've always said that what have driven inflation is the exchange rate and also the high cost of importation of most of these goods that were generally used by Nigeria. As it stands now through the import-export window and through the parallel market, we begin to see convergence. And again, this convergence is not as far, it's not far from where we thought it is today, and maybe it will get a little bit better going forward. So that in the short term and in the long run might be able to address the inflationary pressure that we are having. I still believe that there's still a lot to be done. And again, I know by the time Nigerians workers are expecting their increment in salary, when that comes in, will there be inflationary pressure in the economy? I think those are part, we don't know what those packages will be like. I expect the government to look at those packages, and as they are looking at those increments and begin to think how they can address inflation. But at the stand now, I think one major key area they've been able to address is the unification of the exchange rate. That will help drive down inflation in the long term.